Shane Oliver. He's the chief economist with AMP Capital. Shane, does this jobless rate open up the prospect now, more likely prospect of a 0.5% increase in December, given the RBA board doesn't meet in January, so they might be trying to look over that 2-month period?
It certainly raises that possibility, and it's just worth bearing in mind that we know from the minutes from the Reserve Bank that at each of the last two meetings they considered either 0.25 or 0.5. So I would suspect that that is what is on the table, not zero. Some were talking about a pause, but I think it's too early to talk about a pause at this point. So yeah, a 0.5 is quite possible. You're right, they don't meet in January. So that's 2 months going without doing anything beyond the December meeting. But I think the more likely scenario is that they do opt for the 0.25 again number, for the simple reason that the jobs market and even the wages numbers that were very strong yesterday, they are lagging indicators of the economy. We are seeing increasing signs of weakness, that rate hikes are starting to have an impact. Consumer confidence at recessionary levels, increasing signs that retail sales are stalling, very weak housing market, all those sorts of things I think will keep the Reserve Bank in the 0.25 camp for now, rather than stepping up to 0.5.
What are the implications, Shane, of those international numbers? We see in the last day or so inflation in the UK still very strong, and also retail sales in the United States also holding up very well. So how does that all factor into it?
Well, they're all biasing towards higher numbers and higher interest rate increases. I think, though, the UK is a somewhat separate story because it has massive problems in terms of energy and various other issues working their way through the UK economy that make it a bit extreme compared to Australia. I think that probably the better guide is the US. The US inflation led Australia on the way up, and more recently the US inflation numbers have been slowing down. Yes, we did see some stronger than expected retail sales figures out overnight. They were certainly pretty robust, but some of the other data coming out of the US, say for housing, for consumer confidence, for industrial production and so on, they're on the soft side, suggesting that at some point the US economy will slow down. And more importantly, we are seeing continued signs coming out of the US that their inflationary pressures are starting to ease, with producer price inflation this week slowing down and import price inflation going negative. So I think the Reserve Bank will take account of those things, but it would probably think the bigger risk there for next year is that the global economy goes into recession or slows a lot, which in turn takes pressure off inflation globally, ultimately making their job somewhat easier. So, yeah, they're going to be concerned about what's going on in the UK and elsewhere, but I don't think it necessarily tips them over to do another supersized hike when they meet in a couple of weeks' time.
Shane Oliver, Chief Economist at AMP Capital. Thanks, appreciate it.
Thanks, Kieran. Take care.